Are you skipping your tax filing just because you have zero taxable income? If yes, you might be accidentally locking yourself out of a global visa, a home loan, or your hard-earned freelance refund. Hello and welcome to NewsX. I'm Kashish Dhawan. When people hear the term income tax return, they immediately think about paying taxes. But what if your income is below the taxable limit? Does filing an ITR still matter? The answer is a resounding yes, and that's where a nil ITR comes in. A nil ITR or nil income tax return is filed when your taxable income is below the basic exemption limit or when your total tax liability drops to an absolute zero. Now, in simple terms, you do not owe a single rupee to the government, but you can still and you should file an income tax return. Under the recent tax slabs, if your income is up to 7 lakh rupees or even up to 12 lakh rupees with the rebates under the new regime, your net tax liability is zero. Yet millions of financially smart citizens choose to submit their paperwork anyway. So the point is, why should you do it? There are 4 powerful reasons for that. Now, first on the list is it creates an official state-verified financial. It is the ultimate proof of income when you do not have a standard salary slip. Second, many banks request consecutive ITRs for the past 2 to 3 years when assessing your home or car loan applications. Now, without it, the credit algorithms might reject you instantly. And third, if the tax has been deducted at source, commonly known as TDS, on your freelance gigs or bank fixed deposits, filing a nil ITR is the only legal way to claim that refund back into your bank account. Now, fourth, several countries require detailed tax documents during the visa application process to prove that you have a strong financial root and discipline in your home country. Now, let's look at how exactly do you file a nil ITR safely and correctly. The process is completely online, but right now, the precision is key. Step 1 is visit the official income tax e-filing portal. Step 2, log in securely using your PAN card and password. Step 3, before you begin, cross-check your details with your AIS or Annual Information Statement and Form 26AS. Now, this ensures that the income you report matches what the banks and clients have already reported to the government. Step 4. Select the relevant assessment year and choose the appropriate form, usually ITR 1 for salaried individuals and ITR 4 for small freelancers. Now, Step 5. Enter your actual income details. If your net tax liability computes to zero, proceed to submit. And finally, step 6, verify it instantly using an Aadhaar OTP, net banking or any other digital method. Now remember, an unverified ITR is treated as invalid. You have 30 days to e-verify, but doing it instantly is going to be the safest bet. But here is the critical timing element many people miss, the deadline. Even for a nil ITR, the standard deadline is July 31st of the assessment year. Filing after this date can attract late fees under Section 234F, even if your tax liability is zero. So, the timing matters immensely. Financial credibility is not built overnight. It is built through consistent and responsible financial behavior. Students, freelancers, aspiring entrepreneurs, and young professionals who file nil ITRs are establishing a financial history that is going to benefit them immensely down the road. Now, a nil ITR is more than just a tax document. It is a record of financial discipline and compliance. So, the next time someone says, I do not pay taxes, I do not need to file an ITR, remember this. A nil ITR is not just about taxes. It is about building a strong financial foundation. And sometimes the most valuable financial decisions are the ones that cost absolutely nothing right now, but they can create massive opportunities for your future. Thank you for watching.
For more such videos, subscribe to the NewsX YouTube channel, hit the bell icon.